Okay, we're live. All right, good morning, everybody. We've got about 14 minutes before the market opens, 15 minutes before the market opens. It is the morning after the election day. Good morning. And the results of the midterm elections pretty much in a dead heat, looking like it's going to go for a runoff in Georgia in December. And so that kind of locks up the market somewhat. In the meantime, for whatever factor it was trying to base a Senate majority on for about a month. So that may keep VIX levels elevated. And things chopping around versus recovering. And then we've got CPI information tomorrow, so that could move the markets. So as of today, however, if we look at how the market traded all night, and yesterday right here, this dotted blue line after the market close, pretty much just straight across. We're at where we closed. We did negligible move to the upside, negligible move to the downside. It was just little tiny fits and spurts all night with overall no final destination. And so that's where we're at this morning, and we're possibly somewhat climbing back up to equilibrium on that, which would be right at yesterday's close. And you can see that here on the daily candle, and this yellow line being where we're at right now in pre-market, yesterday's close being right there on the Qs. And it's the same situation on SPY. There's every market. So this could be yet another somewhat of a low volume doji day because CPI is tomorrow, and we might, would rather wait to invest heavily in not one direction, to pick a direction in one direction or the other for tomorrow's data. So I do believe if there are any strong moves today that they're going to be fake. So you can make money on them moving, but you could also probably anticipate them reverting back to equilibrium again. Equilibrium can change. We'll see where that goes today. But as of the moment, equilibrium is pretty much dead center on yesterday's close. And that's what the day's kind of looking like. I did want to take a quick look at gold because it moved a lot yesterday. And let's see where we're at with that today. So as far as I'm concerned, 1750 is gold's resistance. So gold has broken down recently and is now hanging by a thread on a kind of breakdown, build up shelf, clinging to the edge of the cliff after being pushed off it. And this could be a good spot to actually go short. It has a lot of range down here. If you've got the worst case scenario, a good trade on gold here is it ranges. And so we go all the way back down to the bottom there. And then better case scenario is it even breaks lows when it gets down the next time. And then the opposite scenario is we're right at the top of this other candle and you just get kicked out. I mean, look at the risk reward on that. It would be phenomenal. Let's just draw that for a second here. We're talking about entry here, risking to the top of this other day's candle with a target somewhere across all the touches of the lows down there. That is a risk reward of 15 to 1. So you only need to be right about this about 7% of the time in order for that to be a profitable trade. So if we're even 20 or 25% likely, that's a massive positive EV over your risk reward. So that's subjecting your money to excellent risk reward and gains and positive EV. So today, you should be looking for a confirmation for short on gold. And that can come in the form of maybe watching the 1 hour candles. Let's take a look at like the 15-minute candles. Some kind of a breakdown in it there because it's just not there yet. And the 1 hours, necessarily showing much of a breakdown yet either. It is having problems testing new highs. So look for a surgical entry today, probably, or tomorrow or the next day if it goes up further. You're looking for a gold short here somewhere. Good risk reward. Okay, so that's pretty nice. I like to see that. Now, we're also looking at these momentum movers. We've got about 9 minutes until the market opens. Yes. MACK, which is Merrimack Pharmaceuticals. They've got some positive results, and also in the news is that they have about $500 million in monies owed to them. You go pursue higher deal. That's MACK. And they moved from $4 yesterday to $13 today. And their movement on the day today is very wide. So it's going from, $13 to $14. That's some good volatility. Right now it's at the low end of that. So this could be a great time to start averaging in on the low end of risk over on MACK. MULN popped, and it may be pulling back. If it is a red day on MULN, it might be kicking off a multi-day move. If we take a look at the daily chart on this, daily, go. First green day was yesterday after a long red decline. Today we've popped up on that potential, but we're bleeding out. That's fine. If we are bleeding out, then tomorrow or on the 1 hour chart on some larger time frame here, smaller than the daily, there may be a reversal entry that you could grab, and then perhaps it goes on a multi-day run to retest some of this area up here. Maybe it goes to 50 cents. Right now you could get in at like 30 cents perhaps, 30 cents perhaps today, maybe 25 cents tomorrow. So that's a good opportunity there. Got that going for us. Gold. Yeah, we're short gold. Yeah, and did I talk about the election already? I think I did. Yeah, I did, and how that affects the market. Mark, are you watching? Are you live? Mark, how's the Hurricane Nicole going? I heard some stories that some people would be able to get out to vote because of the hurricane. That's interesting. I guess Mark's not there, but maybe he is. All right. Well, we've got 7 minutes until the open, and we're prepared here for a rangy filled day, for extremes to be made, and then for it to trap and range all day until CPI tomorrow. If there's any money to be made today, it's going to be in scalping and not holding, or momentum day trading, some small cap alley trades, as I like to call them. Alley games. Ben, you've got like Benjamin Johnson, you've got 2 logins going on. That's perfectly fine. Chris, anything, Chris, according to you? Vlad, welcome. Tatum. Morning, RJ. Kevin, I hope you've been staying tight and watching out for the chop. Just remember the professional trader. Everybody remember the professional trader loses more often than they win. So it's not being right makes the professional trader better than the amateur trader. Although maybe they do increase their odds on that end twice as much to the amateur trader by finding setups and likelihoods. But what makes you profitable is cutting your risk tight. Like just think about, what is your average gain? What do you typically make on a trade? If you lose anywhere near that, typically, you'll be broke in a few weeks. Just because we lose more often than we win. You need your losses to be 3 or 4 times less than your typical wins. So if you don't know where to cut your losses, just look at your wins. You know, how winning are you? And then take that and divide it by 4 and don't ever lose more than that. And then boom, you're a profitable trader. That's all it takes. It's the rest is discipline and up to you. Some people have the discipline and some people don't. You'll find out. I already went over the election. Stuff. It's moving towards runoff. It's at a dead heat. The market's not really going to move anymore on that information, and it's going to wait till CPI tomorrow, data tomorrow. We're getting some bearish divergence. I'm going to just go ahead and get a short entry here just before the market opens. Bearish divergence on the market just before it opens. But I am going to go in really light because I expect that to bottom and reverse and trap. Disney got hammered. Oh, yeah. I mean, nobody wants to take their kids to their freaky movies anymore. Oh, interesting. That's Disney normalizing the anti-family. 2020. Mickey cut off his beep. All right, market's about to open. In 40 seconds. CPI is tomorrow morning. I believe at 8:30 a.m. Eastern Standard Time. All right, expect some volatility at the open. I think any moves today are just fake, but you can still make money off them and they can still move. I think they'll end up being fake. pushing down at the open. And what's up with MACK? Netflix flush week today. Ben. Right there, some further drop on the market. Instantly bought up. I take risk off the table while it's positive, seeing that the down push got bought up so quickly, but yet we still could move down. I just don't want any part of it yet. It's too early in the market hours. Taking direction. All right, MACK is at 13. Was anybody able to get into MACK at 12.5 area? Nice spot to get in. All along the low side, if it has any potential. But keep your stops tight. ARRY failing out, MULN bleeding down. MULN's at almost the 30-cent level that we talked about. Not that it has to bounce at 30 cents. You should watch it on a time frame to try to find an entry. But I think we may have a red day on MULN. There might be some gap fill happening on Disney. Red right off the open on MULN. And then moving into yesterday's range. I don't know, maybe 29 cents is my, that 29 cents could be the bottom on MULN if the pullback today. We'll see. And we are moving down further on the market. Pronouncedly. I don't know if that's a word. I think it is. Oh my goodness, look at it drop. Everything looks like a lot when, you're zoomed into the level of fleas. A flea jump looks high to a flea. Oh, thank you, grasshopper. NRB up 20. Yeah, we were watching it, but it looked like it didn't have much potential at all. Like it was looking like it was failing out. Let me pull that up. NRBO. It's quite the dead cat bounce. I don't think it's happening. MNQ is relatively stable. Oh, compared to S&P 500 is a little bit more violent. Well, they're all moving around about the same. Might be a short little scalp here at the bottom. I think today's just going to be just quite choppy. I'm feeling this is going to be a short broadcast. MACK now at 1350, almost 1330. Did anybody get MACK at 12.5 area? Who's in MACK? What'd you get it at? How much you bench? Ola from Colombia. Hey, what do you say? Buenos dias. Bienvenido a mi canal. Is that correct? You are. Okay, good. All right. 1360. All right. 1365 on MACK. Back on the market here. Gracias. Okay. And now MACK is pulling back to 12.57 pretty quickly. Make sure you stop out, especially at your break even. If you are below your break even now, get the fuck out. Don't ever let a gain turn into a loss. If it has, get out. Don't wait for it to come back up. That's bullshit amateur thinking. If you missed it, you missed it. You have to get out. Next time, don't miss it. Is Vero halted? I am not aware of that, but I do have it up on the bottom right of my screen, and it doesn't seem to be moving, so maybe. BTU back where it was. Okay, good. Let's take a look at that. By the way, who's in SSOK? My alert was at $6 2 days ago. It's now at $8.24. Oh, we got entry on RLP, not entry, but at least an alert on RLP. This is one we were stalking. It is back at the byline, guys. RLP. So what I like to do in these situations is take a small position, like a small part of the position on this pullback, and then add to it at the end of the day, depending. And then if it goes up further and does like green over red on the daily or on some medium term time frame, finish it off with the final buy. And that's how you get a kind of clustered pullback entry. Looking at BTU. Oh, that's what you mean by back to the back to the buy point. I thought you meant in a positive way, like it dipped and now it's come back up. So just go ahead and exit then, unless you have it hedged. Yeah, MACK failed out at this point, it looks like. Gonna take a shot at this being a double bottom on the 10-second chart on the market, but it is a bit of a long shot. I'll stop out if we make a new low. Last thing I want to be doing is bottom fishing and bottom fishing and bottom fishing all day. But I do believe that this is going to be a range bound day. Huh. And now we got a BTU alert. RLP going down more. If I had to bring up the 1-minute chart, you might get an idea of what's going on over there. It's just a couple of trades of sell off. So the time to get in, maybe, later today. There may be no emergency on that, or even tomorrow. You know what? It could have been, let's see, when was earnings? I had the earnings release already, and looks good to me, the earnings. The last time we had pullback entry on RLP to the 100 moving average was in September. And then before that, June. And before that, December. So you don't get very many chances on this beautiful uptrending RLP. To alert this. All right, so that's RLP trade alert. That is off. Wow. If I've caught the bottom on the market, then I wouldn't mind snowballing an entry on a pullback here if there is a logical one. Isn't. It's looking. Basically already hit the buy point. Was to be one. I think I'm getting an internet glitch and no update. Okay, there we go. Should get an entry there. Did not go in. Oh, it says we have failed to deliver your order. Think or swim. Nick. 23 years in a row. I love you. Not. Do I ever set limit orders and OCO or trades? Right. Yeah, I understand. Yes, it depends on the system that I'm on. Like over here, I can set up take profits, stop losses, stop entries, and then that can automatically trigger. You know, Ninja Trader allows you to put a lot onto your trade. That's kind of like auto trade management stuff. Over in Ninja Trader, that's ATM, auto trade management. Do trailing stops. It can attach things to moving averages, other indicators. You can buy plugins to manage your trades. So a lot that Ninja Trader can do. And there we go. Looks like I doubled up just in time. Shit, I forgot to double up on this other account right here. Actually, would have been nice. All right, I am hunting equilibrium, so that's going to be something like 11080, 11090, somewhere around there. 110. I might even take some off at 11050 because that is VWAP on the day. Might be able to fish my wish on an entry back to here. 1120, get a snowball entry. 20, let's see what that looks 25. Let's see. Get on there. And I can move my stop, by the way up to break even at minimum, if not more. My other entry. To 11,002 roughly. Account. All right. Decent bounce from Tesla. I don't know. Let's see. I'm still trying to get this RLP. Anybody get your RLP on? Got some. All right. Good job. Remember, I'm not sure, RJ, but I think you were in that class talking about that. It's kind of crazy that it's already there. I got to go back and get one more exit level here. That's going to be it for me today. For now, for the morning session. I'm not saying I'm going to leave yet. I'm still working this RLP entry. That's going to be it for the trading because it's just chop. Every indication of direction has hit like its mercy reversal point. And that's been twice now. And so I'm good. I think I'm down $90. It's really not a lot. And that's what keeps you solvent right there. When to stop. We need direction, I need to be able to get into a trade and be up $300. That's gonna happen tomorrow, per contract. The chop today is just down to too low of a time frame. There's chop on the biggest days as well, but it's on a larger time frame. We've got chop down to the 2-minute. It's just useless. There's no trend. Look at the difference here on the, see, I'm drawing these lines. Good Lord. Look at the difference here between these two lines. Let me type them up and then you'll see what that is. You guys see those two lines and what and maybe it's not so easy to read. You guys see that? Those two lines. You guys read that? Okay. This. So that's the difference between by expiration, where you would need price to be in order not to lose all your money if you buy an out of the money contract versus an in the money contract for a month on RLP. That should give you some sense of how stupid it is to buy out of the money options. Because with an out of the money option, unless price is above this pink line, you'll always be negative and losing all your money. The pink line. But this blue line here is an in the money option, 80 delta. And so long as price remains above that line, whatever it is above that line is profit at any point in its journey till the end of that line, which is expiration. Obviously, if that's news to any of you guys, you should go ahead and take the market mastery classes of mine, where I do go over that, pretty much in detail. But boy, is it's so apparent on there. Like, for example, let's say you're expecting price to do what the pink line does. Let's say that's what you're expecting price to do. Well, if you get the out of the money option, you'll make no money, maybe lose all your money by expiration, if that's in fact what it does. Because that's the break even line. But if you buy the in the money option and it does what the pink line does, you'll be up hundreds and upon hundreds of dollars. You'll be up about 50%, I think, by expiration, because it's about $700 for the in the money option, and it's about $70 for the out of the money option. Another thing is, if price goes down from here, like this, anywhere along the line, let's put you'll be almost completely at an 80% loss on the pink option. But because the blue option here, the in the money option, had $700 of premium on it, you go down 700 So that's all the way down to the 15 strike. And you can see, wow, it's way down there. How much you would be down? There we go, 15. So according to this, you'd be down about, let's say price goes down to here by this point. Over on the out of the money option, you've lost all your money. On the in the money option, you still have maybe 80% of the value, or if price goes over here, 90% of the value. You're only down like 10%. So, again, or let's say price goes down this much in the next 2 days. You're only down from here to here. You're only down from here to here, versus all your capital that's left and deteriorating, not the premium. And so you're down 10% on that option versus on the out of money option, you're down almost 90% at that point. So just so you know, again, don't buy out of the money options because you're just screwing yourself. You're just giving away your money. It's like we got an inverse head and shoulders going on here. Sometimes that can be a bottom. I am not going to get involved. I do not think there's going to be a beautiful directional trade today. Just doesn't seem like that kind of day. And I've already tried. And so far, it doesn't seem like it. Wait for the flop and then all in. I love it. All right, guys, that'll be it for the morning session today. Let me take a quick look at the momentum movers. Yeah, MACK failed. MULN down to 20, almost 28, the level I said, 28. I think I said 29 cents, 28 cents. Yeah, we're right around there on MULN. But, you want to watch for it to curve and put in a bottom reversal on the 1 minute or a small time frame here to get that surgical multi-day entry. You're looking for a multi-day entry on MULN since it was green that first day after being red so many days. And then it gapped open today and we're getting some pullback. And so you might be able to get, yesterday's price today. That's better risk. That's better risk reward. Because let's say it's going to go to 45 cents from 29 cents. Well, that's a 55% gain in a couple of days versus if you had got in just now at the open and not waited for it. %43 gain. But additionally, you'd be down 12% already now. That's the difference between waiting and versus not. So you're looking at a 55% potential gain from here. And then perhaps you cut at 27, 28 entry. 55% gain and 3.5% downside. Much better risk reward. Mike says, I'm not touching anything right now either. Yeah, no, I'm going to go to the gym and I'll be back later, you guys. Have a good morning. And Lizzie, I hope you got out of MACK on that pullback. MACK has a lot of potential. Keep an eye on it. All right. Bye, everybody. You're welcome, Carl. Get that ROP position clustered entry happening over the next few days here.